The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.
And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. But before we get into working on your financial freedom, I have one very important thing to say to you. Are you ready? Gobble, gobble, gobble. You heard me correctly. Gobble, gobble, gobble. It is Thanksgiving Day. Happy Thanksgiving Day to you. I am so happy that we are getting towards the end of 2022 because I'm really looking forward to the opportunities that will come in 2023. And I really want to welcome all of those listeners out there that normally don't listen to the show. And the reason you don't listen to the show is because you're usually working at this time slot on a Thursday. So you don't get the opportunity to listen to me, but because you're home today and you've got nothing better to do but watch football and eat some really great food, you decided to turn on the radio and listen to what goes on during the week. And I am one of those things that goes on during the week. And how about this? How about this for a catch? Are you ready? What if you could turn $32,000 into $165,000 in 5 years, and it doesn't require a ton of effort on your part? Would you be interested? And I think the short answer is, what? You're talking a 415% return? Why, of course I'd be interested. All right. Well, what you need to do is stick out today's show because I'm going to get into the nitty gritty about how you can turn $32,000 into $165,000 over a 5-year period. It's completely legal. There's nothing unlawful about it. And you're a little bit taken back because you're thinking, wait a minute, my financial planner tells me I'm supposed to get like 7, 8, maybe 10% in the market. Of course, right now, your financial planner is telling you you're dollar cost averaging. So as a result of that, you're not even really making money. What you're trying to do is you're trying to buy shares of stocks when they're at a depressed price and hopefully benefit from that when and if the stock market does come back. The stock market probably will come back, but it's a question of when. And if you're looking at retiring in the next 5 years, you don't want to be in the stock market. I'm just here to tell you, you don't want to be in the stock market. What you need to do is seriously consider cashing in all of those funds that you have in the stock market. Yes, that's exactly what I said. And you're thinking about turning off the radio right now, but don't do it because in 5 years, you could be retired. I don't care if you're 20 years of age. I don't care if you're 30 years of age. I don't care if you're in your 50s or your 60s or your 70s. You can be retired in the next 5 years. The retirement plan that you're following does not have to be a 35 to 45 year effort. It does not. As a matter of fact, one of the reasons you don't know about anything that I'm talking about is because nobody bothers to share this information with you. Yeah, think about it. When you took your job, what did they offer you as part of your compensation package? Okay, they gave you a salary, right? They probably gave you some kind of health benefits, maybe a matching thing, maybe where they pay some, maybe you pay some. Maybe you got real lucky and they pay for it all. Maybe they gave you a 401k. They said, hey, we're going to give you a 401k. And as a matter of fact, we're going to match the money. So you're going to put in X number of dollars. We're going to put in Y number of dollars to match it. And that's going to like double or triple or quadruple your amount of money. And you're thinking, wow, this is the way to financial freedom. This is the way I get myself retired. But here's the problem. How long have you been following that plan? And I would tell you, if you've been doing anything for 5 years straight and that has not resulted in you obtaining enough passive income to offset your cost of living and therefore retire yourself, then what I suggest you're doing is ineffective and it needs to change. So what we're going to do on today's show is I'm going to get into the minutia of analyzing some properties that are available for sale, and we're going to talk about the benefits that these properties can provide to you, because this is how you get yourself retired in 5 years or less. You take $32,000, you invest it correctly, you own and operate that asset correctly, and at the end of 5 years, when you dispose, when you sell that property to somebody else that wants it, you will have made a 415% return on investment. And that's just one asset. Do you know that you can own more than one asset? Now you're thinking, well, wait a minute. Now we're talking about more than one. So that's got to be really difficult. That's got to be a challenge for me to manage. And I'm here to tell you, it's not a challenge at all. When you do it the Lifestyles Unlimited way, there is no challenge to doing any of this stuff. Okay, there's a little bit of a challenge, and that challenge has to do with you're actually making a difference in your financial lifestyle. That's the challenge. And the result is you get great results. You get financial results that change the trajectory of your life. Now, before I get too deep into the weeds and I start talking about these deals, what I want to do is share with you what I am thankful for. You heard me correctly. I want to share with you what I am thankful for. After all, it is Thanksgiving Day. I decided to get up and do radio today because I wanted you to hear fresh content. What am I thankful for? Well, I'm thankful for a lot of things. The first thing that I'm absolutely thankful for is God. Thank you, God, for creating the world and for creating me and for creating the next thing that I'm thankful for, my family. I am very thankful for my beautiful wife, Tina. The fact that she stood by my side through 27 years in the United States Army. She never faltered. She never wavered. She stood by my side when I left the military and I found myself in a financial predicament because my pension that I earned from the military was not enough money to cover my costs of living, and I had to go back into the workforce. And she stood by me during that difficult time, and she stood by me when I got back into the workforce. As a matter of fact, she stood by me when I went to Lifestyles Unlimited, and she thought I was nuts. She thought I was nuts that I was going to join this Ponzi scheme called Lifestyles Unlimited. But here's the result. I wasn't nuts. Yet she still stood by me through the 2 years that it took for me to get us to a place of retirement, something I was never, ever able to do prior to that point. I know for a fact that some of you are listening to me today specifically because you have the day off. Because it's Thanksgiving. It's a national holiday. It's the day that the majority of Americans take off. Now, some people like me are working. The reason we're working is because we want to reach out to you and let you know that it's okay to get yourself retired in the next 5 years. Okay. Well, let me educate you on the real estate market first. The real estate market is very healthy. In spite of what you've been listening to in the national media, the real estate market is very healthy for investors. You heard me correctly, for investors. And on today's show, I've got a couple of deals I'm going to talk to you about. One's a duplex. One is a house with a casita setup, which kind of makes it a duplex, but actually gives it a little more utility because here's why. There are people out there that are looking for homes to rent that have something called a mother-in-law quarters. Yeah, have you thought about that? It's true, especially when we look at what's going on in the economy right now. There are people that are doubling down on housing because housing costs are going up. Rent is going up. Just look around. You can read all the articles. They're all out there. The housing market is actually very healthy. One of the things that is occurring in the housing market is we're seeing that some of these overpriced properties are actually coming down into what I consider to be a natural pricing zone. Yeah, because we're moving away from a pure seller's market. Now, it is still a seller's market out there. I've articulated this on the show before. I will articulate it right now for you. This is still a seller's market. Why do I think it's a seller's market? Because there's not enough inventory available in the marketplace to indicate that it's a balanced market. What am I getting at? Okay. Statistically, right now, as of Thanksgiving, there's only about 2 months worth of supply of inventory across the nation for homes available for sale. You need to be in the 4 to 6 month range in order to have what I consider to be a balanced market. In other words, there's as many sellers as buyers in the marketplace trading properties. And when you get beyond 6 months and maybe you get closer out to 9 months and beyond, then it becomes more of a buyer's market. In other words, terms and conditions favor the buyer. But that's not the case right now. The case right now is that terms and conditions still favor the seller, although the seller may or may not be able to get the absolute maximum top dollar for their property because they may have actually just kind of missed that window. It doesn't mean they won't make great money. Now, here's another thing I want to share with you that's really going to blow your mind. When we buy real estate, we don't focus on today. We focus on what does that asset do for us over time. Case in point, I told you that I'm looking at a deal right now. It's a 3-bedroom, 1-bath, 2-car garage property. That's what this thing is. It was built in 1930. It's about 1,630 square feet. It looks like the garage, somebody started to convert the garage and to convert it into a casita. In other words, an additional living quarters. So this casita may or may not have plumbing to do, say, a kitchen in it. But many casitas come with a small little kitchen area. Of course, they have their own bathroom area, and that makes it a nice little place for somebody to live. And the neat thing about this property is this property would market directly to families that are looking to rent a property where they want to have mom or dad living with them, but not necessarily living within the 4 walls. Does that make sense? Yeah, this is a great property to target that type of individual. Or the other option is you could split it in half. You could rent the main house to a family, and you could rent the casita to a college student or a single person, somebody that just needs a little studio apartment. Yeah, this is what makes this property so interesting for me. Now, I'm going to get into the deal right now. I know I was going to tell you why I was thankful for my kids. I'll get to that, but I'm just so excited about this deal right now. So I was looking at this particular deal and I was comparing it to an actual duplex that came on the market. Let me just tell you what I'm seeing. Now, I've already described the 3-bedroom, 1-bath, 2-car garage to you, correct? That property. Okay. The other property is a duplex. It's located in a different part of town. Oh, by the way, both of these properties are located in the greater San Antonio market. Okay, San Antonio is a great market for you to invest in. Trust me, it is a great market for you to invest in. This particular duplex is a 6-bedroom, 2-bath duplex, meaning both units are 3-bedroom, 1-bath. Everybody that lives on either side shares 1 bath. So this property is 1,904 square feet. It's a newer property. It was built in 1981. So it's going to have different conditions than the other property that was built in 1931. I mean, they're different building standards that were in place at those periods of time. In addition, the property that was built in 1931, well, it's been around for a couple of days, has it not? It's been around for over 90 years. Versus the property that was built in 1981, that's only been around for maybe 40 some odd years. Okay, so the age difference is something you have to take into consideration. However, this is the part that I start focusing on. I start looking at what are these assets worth in the future. Now, that 3-bedroom home with the casita, the after repair value for this particular property, given the area that it's in, it's actually a very desirable area, $365,000. Now, I can buy this property for about $200,000. Okay, let's stop right there. Let me switch over to the duplex. Because in the duplex, that after repair value is $280,000. So it wouldn't be worth as much as the house with the casita. However, I can buy that property for $166,000. So the difference here is about what? $34,000. I can buy this property, this duplex, for less money. However, this is where the rubber meets the road, because when I start analyzing what needs to be done to repair these properties, and I start looking at the equity capture that I'll have in these properties, in the casita, I'll capture almost $68,000 worth of equity. So that's additional equity that I have in the property over and above the amount of money that I put into the property which is calculated at about $32,000. Now, when I look at the duplex, I'm only going to capture about $37,500 worth of equity. So that's almost half of what I would capture in the other property. And it's going to take about $51,000 for me to do that deal. Okay, right there and then, I'm already leaning towards the house with the casita. Even though it's going to cost me more money and it's going to be worth more money, it's going to make me more money. When we come back from the break, I'll tell you why I'm thankful for my kids. Stick around.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
When you look at the effects of what happened in 2008 and you compare it to what we are hopefully coming out of right now, real estate has definitely shown its resiliency. It has provided for people not only a place to live, but a place to work, a place to raise their children, a place to teach their children, a place to prepare all of their meals.
And that's really where the rubber meets the road, is that there are two things that people have to have, and they strive very hard to have them, and that's a roof over their head and food on the table. And if you are investing in something related to either of those two things, you are going to have a winning strategy. And in addition to that, you're providing something of value to the people around you. And creating a win-win situation while creating wealth and passive income for yourself is the best life you can get.
Real estate is resilient. You should have real estate in your portfolio. Join us for the next live online free workshop. Register at lifestylesunlimitedworkshop.com.
Listening to Lifestyles Unlimited Real Estate Investor Radio Show will change your life. Now, here's your host.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and here's the big takeaway for those of you just joining me today. You can get yourself retired in the next 5 years. This program is designed to assist you with understanding that there is a better way to achieve financial freedom in your life. And I'm here to tell you what you're currently doing for retirement. The statistics are absolutely against you. Less than 5% of all Americans retire at or above a level of richness. In other words, you have income coming in that covers all of your expenses in life. In addition to that, you have income coming in that supports something called a lifestyle for you. And here's the other beautiful thing. When you achieve retirement, you also achieve something called control over your life. We have plenty of Lifestyles Unlimited members that have achieved retirement, yet they still continue to work. Now, some of these people, they continue to do the job that they were doing before they achieved retirement because they love what they're doing. Others, well, they changed jobs. They didn't like the job they were doing, but they liked the career field that they were in. So they went to work for somebody else. Now, maybe they didn't make as much money working for somebody else, but they got a self-satisfaction out of it. They got a quality of life boost from changing jobs. And that's a beautiful thing. Some people like me, well, we just pretty much leave the workforce. Other than the fact I do the radio shows three times a week, I am essentially unemployed. I'm totally fine with that. Yeah, if you take a 40-hour work week and you overlay my requirements on it, I don't really tap too far into that 40 hours. As a matter of fact, the bulk of that 40 hours is available to me to do whatever I want. My family, because I am very thankful for my family. Now, earlier in the show, I told you that I was very thankful for my wife. She has been by my side through thick and thin for well over 27 years in marriage. Okay, so I'm very thankful for my wife, but I'm also very thankful for my children. Yeah, my son, John, he's a first lieutenant in the United States Army. As a matter of fact, he is deployed overseas. He's probably already had I know for a fact he's already had his Thanksgiving meal, and he had that meal with his military members. They're over there doing what the Army needs them to do, and I'm very thankful, not only for my son being my son, I'm thankful for his commitment to our country, to be willing to serve our country, even though that service to the country is coming at a great economic cost to him because he's not able to do what he wants to do as far as real estate investing. He wants to be a lead investor. He's already qualified. He's certified. He's gone through all the education, and we've just been waiting for the right time to get him started. But unfortunately, the military called and said, you know what? You need to go into harm's way. So he went and did that. He's doing it right now, and I can't be more proud of my son. I am very proud for my daughter, too, my daughter, Jessalyn. She is finishing up her last semester of college. She is a Bachelor of Fine Arts major, and she has been working on this massive art project that, to be honest with you, doesn't look like a student made this thing. This thing looks like it should be hanging in the fine art galleries across the world. That's the talent level that my daughter has. Now, here's where we're at with my daughter as far as investing. We wanted her to complete a college education, not because we thought that college education was going to get her that great job out of college. No, we wanted her to go through the college education so that she realized that maybe that college education wasn't necessarily cracked up to be what it was to be. But one of the things that she did get out of this college education was it honed her skills as far as an artist. She did get that skill set to mature, and I'll tell you, it's matured radically. So my daughter has become a great artist, but here's the other thing that's been going on with my daughter over the past year. We have been working with her to set her up to be a real estate investor herself, because as she comes out of college next month, she's going to be looking for a job. The best job that we can suggest to her is to become a real estate investor. Yeah, a real estate investor, but it's not really a job. It's really more of a part-time job. It's really a part-time job. So one of the things that we're going to do with Jessalyn is we're actually building a studio on my physical property where I live. I'm building a studio for her so that she can be self-employed and she can continue to pursue her art. But along that line, we will be assisting her with building a management company so that she owns the management company that will support my son, who will become the lead investor once we get him out of harm's way and we get him back home. This is a very important part of my family strategy, because this gets back to my thankfulness to the Lifestyles Unlimited community. Yeah, my thankfulness for having been a part and will continue to be a part of the Lifestyles Unlimited community. The reason I love the community is these are all like-minded investors. They've all received the same level of education that I've received, so we're able to talk at a higher level than most people can about real estate. And I apologize to you if sometimes I'm talking a little bit higher level on the radio show than maybe your ability to comprehend. I'm not putting you down. I am not putting you down. My point is there are certain things that maybe you just don't know, and we understand that at Lifestyles Unlimited. We want to share that information with you. We want you to know all the information, and therefore you can use that information to change your life. By the way, happy Thanksgiving to those of you listening to the show today, and happy Thanksgiving to you, those of you that are new to the show and just checking us out, because normally you're working when this radio show is on. So we're glad you're part of the audience today. What we're going to do is we're going to talk about a property that I found last night that I'm very interested in buying. This property is a 3-bedroom, 1-bath home. It's almost 90 years of age. It's located in a very, very nice part of San Antonio. It's actually a part of San Antonio that went through what's called a gentrification. In other words, it's an updating of a particular area. As a result, we know this property could be worth $365,000 when it's all fixed up, when everything is done. Now, I can buy this property today for $200,000. I'm not going to write a check for $200,000. What we do is we take advantage of something called hard money. What is hard money? Well, hard money is a asset-based loan. So in other words, I have relationships. When I say we, I'm talking about the entire Lifestyles Unlimited community. We have relationships with hard money lenders that understand what we do for a business model. They understand that we're going to be utilizing their money for several months. We don't intend to be utilizing their money for any longer than 6 months at the longest. And as a result, we make a very good business risk for them, and they like to loan us money. The reason I like hard money loans is they're willing to loan me money that is 70% of the after repair value. And I can use that money to acquire the asset, and I can use that money to fix the asset up. And once I run out of that money, then I have to start contributing my own money to the project, and that makes up the entire amount that is contributed to the property. Now, when we do that, we are essentially buying and rehabbing the property at wholesale pricing. You heard me correctly, at wholesale pricing. Now, it's going to take $32,000 out of my pocket in order to do this deal. Now, some of you just got a little choke in your throat, right? You just went, 32,000. Where'd you get that from? Well, I'll tell you where I got it from. I got it from the other real estate that I sold. Yeah, so I sold real estate and the money's sitting there waiting to be redeployed. That's where the money came from. Oh, you're asking where did the money come from initially? Oh, okay. So the money initially came from several sources. It did come from real estate. I did own some real estate prior to becoming a member of Lifestyles Unlimited, but I did it all wrong. I totally did it all wrong. And I can smile and say that now, but it didn't feel so good when I realized it when I became a member of Lifestyles Unlimited. But I corrected all of that stuff. I was able to put that stuff on the right path, and then I was able to sell those properties and do what's called a 1031 exchange. In other words, I was able to move the tax liability into follow-on property, so I didn't pay any taxes when I sold those properties. It was a beautiful thing, and I was able to use 100% of the proceeds to buy additional assets, some of which I have already sold, some of which I still own, because it just depends on what the asset's doing and where it is in my decision-making process and how it's going to be applied to my future projects. Yeah, it's just the way it works. All right, let me get back to this property, because I can buy it for $200,000 and I'm going to rehab the property. It's going to take about $87,000. Ooh, that's a big number, huh? $87,000 to do the rehab on this thing, because the casita, it was started, but it wasn't finished. The interior of the home, very dated. It needs modernization, it needs upgrades. As a matter of fact, there's some problems with this home that need to be addressed. Things like foundation problems, things like roofing problems, things like outdated HVAC systems. All of this stuff needs to be addressed, and it needs to be upgraded and fixed or repaired so that it has at least a 5-year lifespan. If it doesn't have a 5-year lifespan, it gets fixed or replaced. And if all of a sudden the numbers become too excessive that it blows the numbers on the deal, I could walk away from the deal. It's as simple as that. And I don't get burned writing something down that's going to go down even more. Yeah, kind of like the stock market's been doing. Okay, there's my little dig on the stock market. So what I'm getting at is we're going to capture some equity in this property. The equity we're going to capture is $68,000. That means that our entire cost into this property is going to be at about $297,000, even though the property is worth $365,000. See, that's that $68,000 worth of equity we're going to capture in this deal. And what's beautiful about that is I'm only putting $32,000 of my own money into this property in order to capture an additional $68,000 worth of equity. That gives me a 212% return just on the capital gains. Just on the capital gains. Now, the cash flow in this thing is not so bad either. Cash flow wise, we're going to make about $395 per month, which is great because over a 5-year period, we will have developed approximately $23,700 of income, cash income that we can use on anything we want. We can use it to offset our costs of living. We can use it and save it so that we can buy an additional asset. There's a lot of things that we can do. See, what I've just described to you is just two of the ways we make money in real estate. The first one was the cash flow. The second one was the equity capture. Now, there's other ways we make money on real estate. There's something called principal pay down. We're going to put the right leverage on this property. The reason we do that is because the lender does not participate in the equity growth. And 4 of the 5 ways we make money on this property has to do with equity growth. Principal pay down contributes to equity growth. Another way that we make money in real estate is the fact that real estate tends to go up in value over time. We know statistically that property values double every 20 years. Sometimes it's faster in some places, sometimes it's slower in other places, but 20 years seems to be that sweet spot. So we know that potentially we're going to get about 3.5% appreciation every year. So with all of these equity growths and the fact that we're getting the ability to not pay taxes on the cash flow because we're going to take a depreciation write-off on this particular property. This depreciation write-off is actually pretty healthy. We're going to have an annual cash flow of about $4,740, which is going to be offset by over $10,000 worth of depreciation. That means you're not going to pay any money on the cash flow. And you're still going to have almost $6,000 of depreciation that you can use against an additional property that maybe doesn't have as much depreciation, or you can use it within IRS guidelines to offset other forms of income. But you have to follow IRS rules. And by the way, I'm not a CPA. I'm not an accountant. I don't even play one on the radio. I just kind of know enough to be dangerous. So make sure you're consulting the right people. When we buy this property, we rehab this property, we find the right residents to move into this property, and we own and operate this property for 5 years. What we will find is that over time, we will develop $165,000 in monetary contributions to our household. You heard me correctly, monetary contributions. And to get to that $165,000, it only costs us $32,000 to do that. Just $32,000. Now, for those of you that are thinking, well, gee, Al, that kind of makes sense. I'd love to get a 450% return on investment, but my problem is all my money is stuck in the stock market. It's in my 401k. Not a problem. You can join Lifestyles Unlimited. Let's get you educated on how to correctly invest in real estate, and then we can address the 401k issue. My recommendation is that you sell off that 401k. You just cash it out. Now, some of you are concerned because you're going to pay a 10% penalty because you're less than 59 and a half years of age, and you're also looking at a big tax bill. Now, there are strategies to avoid some or all of that. As a matter of fact, the penalty can be avoided if you're married. There are procedures that we can follow. There are vendors that we have that can help you tap into that money. The other thing is with the taxation. How you draw that money out is going to be indicative of how you're taxed. So there's strategies for taking that money out. The best way to explore all these things is just to become a member of Lifestyles Unlimited. I want you to become a member because we will teach you everything you need to know. You will get yourself retired in 5 years or less. Now, some of you might take a couple more years. It just depends on where we all start. But at the end of the day, you can achieve retirement in 5 years or less. That's not a pipe dream. That's not a smokescreen. That is legitimate truth. I'm a guy that did it in 2 years. Now, 2 years, that's a little fast, but it's possible too. I want to wish you a very happy Thanksgiving, and I want you to go to lifestylesunlimited.com, get signed up for our free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.